Seth, welcome to a business leadership podcast today. I looked at your profile while preparing for our discussion, and commercial real estate. I'm a student of that, and you are podcast host. You have a TV host as well, and you've been working on this real estate for many years. I'm looking forward to our discussion, and learning from you. Thank you so much for your time today.
Yeah, no, thanks for having me.
Give us a little background. How did you get involved in commercial real estate, multifamily homes, actually?
Oh boy, yeah. So that goes back. I originally got my start as a residential real estate investor. So I was doing like single family homes, like duplex conversions, a condo, that sort of stuff. But like a lot of Canadians, I lived in the Greater Toronto area, where the cash flow isn't particularly strong, the yield isn't there, and you find yourself being equity rich but cash flow poor.
Mm-hmm.
What happens is, if you're trying to scale your portfolio, a lender's going to look at you, and even though you have a large amount of equity built up, the cash flow just doesn't support another property. So you're fighting tooth and nail. You're giving your firstborn child with like your left leg and your right arm just to get another loan so you can grow the portfolio. So I was feeling like I was hitting my head against the wall and I wasn't getting anywhere. And then when my son was born, I had a bigger incentive to do more. Like I remember holding my son, and my life changed in the blink of an eye. And I wanted to do more and be better for my son now, not just for myself. And so I sat down and I figured out, okay, so to hit my real estate goals for what I want to do, what do I have to do? And I realized I had to own 1,000 houses. Now, I don't know about you.
Wow.
I can't imagine dealing with 1,000 tax bills, 1,000 roofs, different properties. Like, that is just insanity. So then I said, okay, like this obviously is not going anywhere, because I know how hard it is just to scale with what I had. What other options do I have? And up to that point, I was totally ignorant about apartment buildings. I would drive by them. I would think that, you had to be a big life insurance company to own an apartment. I had no idea about the world of commercial real estate.
Mm-hmm.
Well, I started researching all the different aspects of it. So I looked at retail, office, industrial, multifamily. And one thing I found with multifamily was, sure, in the good times, multifamily like performs really well, but I was more attracted to how it performs in downturns. And multifamily is by far the most stable asset class. You look at the past 3 recessions, it's just outperformed. So I got attracted to that, and I haven't looked back.
Wow, very interesting. I see a lot of commercials and a lot of people doing in the U.S. side, Florida, Miami, and that area, and never looked at a Toronto market. So what are the difference in our market, in Ontario compared to the U.S.? Is it a similar kind of approach? Same kind of cash flow comes back, or is it a different? What do people need to understand?
Yeah, well, the big thing for me, and the reason why I started looking south of the border rather than here in Ontario, is we have landlord and tenant laws. In Ontario and other provinces, we have province-wide rent control, and that is prohibitive. And in my opinion, I could probably rent for hours on this, but in my opinion, rent control is the reason why we have such a rental housing crisis right now, because owners are not incentivized to improve the product because they're not able to capture that return they're looking for. If you're capital into the market, it's not up to the government to say, no, like you can't earn a return on your money. So when you look at the US, from a policy standpoint, California imposed rent control, but it's not as restrictive as we have here in Ontario.
Mm-hmm.
But the markets I'm looking at, Texas, Florida, you have a lot more control. You have less government intervention. And, like here, if somebody doesn't pay the rent, they can stiff you for a very long time. And it's very challenging to get them out. You look at Texas, you have to pay your rent, or else you can't be a resident in the property. And the one way to look at it is, let's say you have one bad apple and 99 good apples.
Mm-hmm.
Bad apple is going to spoil the bunch. So it's not like a lot of people say, oh yeah, you have to protect the tenants. Yeah, protecting the tenants is removing that bad apple so the 99% can go on and live in a safe community.
Mm-hmm.
So I think, my personal belief is the government intervention and the government policies backwards. and multiple studies have shown that removing rent control actually makes things more affordable. But yeah, so that was a very long answer and a bit
No, no.
but what's different? Government policy, number one. Also, when we look at types of properties, you go more south, you have more garden style. Here in the GTA, the land costs building more high rises, plus having a pool, you're only using it for a small percentage of the time because we have you go Florida, you can swim almost the entire year. So different property types, and we can get into more raising capital requirements for that. There are small differences between the two countries, but generally it is very similar.
Wouldn't you think that we have such a shortage of housing in Ontario that government's looking to loosen some of those policies that and incentivize the developers to listen, improve the value of the property, so not only you getting a cash flow, but the value is going up as well, right? So your equity is going up as well. So shouldn't they be looking into that? That hey, listen, we have such a shortage of housing. Let's build this business pro policies.
Yeah, but the problem is every election cycle, it sounds good to say, oh yeah, we're the tenants and all those rich, greedy landlords are just looking to make a buck. But the truth is, the majority of landlords out there, property owners, they have one or two other properties and they're trying to make their own retirement. So it's not greedy, rich corporations. It's just normal people who bought a property. Maybe they bought it to sell later to put their kids through university or college, something like that. It's just regular people. But yeah, it's all election spin.
I see.
Unfortunately, the real fixes are not going to be entertained. In this part of the country, just based on political ideology.
I see, but I see a lot of development going on even throughout the COVID. That sector never stopped, right? So look at a little bit north of Toronto, and in Toronto, a lot of buildings going up. So is the development still keeping up with the demand, or are people looking at other options?
No, we have such a shortage of housing starts. We could build for the next 10 years and still have a deficit of units.
Wow.
What's happening, if we look at the rental housing crisis versus the housing crisis for purchase, the rental housing, what's happening now? All the developers are building condos because it's more attractive. They can make more money building the condos than purpose-built rentals. Mm-hmm. So I think a lot of red tape has to be removed to have that influx of purpose-built rental product come into the market. But yeah, the number, you just look at how many people are coming into the country every single year. Now the numbers kind of got changed a bit with COVID the past couple of years, but and the majority, they'll land at Pearson Airport and they stay within the GTA. So there's such a huge demand for housing. And the US is very similar. You could for a decade and still have a shortage of what's coming online. So from an investor standpoint, you have a product that is in very high demand and you can't sell out. It is impossible to sell out because the demand is so high. So why not start selling the product and start investing?
Does it create a challenge for investors when you're looking for product in a market? Do you have enough inventory to pull from, or is just such a shortage that you have to settle with whatever's available out there?
Yeah, it's the market's very tough. It's challenging right now. You have a lot of buyers and not a whole lot of inventory, and that's obviously driving up the price. So looking on the commercial side, if somebody's not familiar with commercial valuation, with cap rates, it's all based on the net operating income the property produces and the cap rate. So the lower the cap rate, the more money you're paying for every dollar of NOI produced. Wow. So, what's happening? Prices are going up, cap rates are compressing. What that's doing is it's putting pressure on the cash flow aspect. So, one of the advantages of going larger with multifamily real estate is that you have more meat on the bone because you have more units. So your expense ratios fall into a more realistic line. So, I know running a duplex, a lot of people are in the red for the first couple years because you're buying a cash flow, a negatively geared property. But let's say you buy a 100-unit apartment building, you're going to be cash flow positive, one would hope, and then you can start collecting that positive cash flow.
Wow. So you gotta be ready for that. They're taking a little bit downturns. If there's no cash flow positive, you gotta. So what can you do? You have to increase a property value. You have to do some maintenance on it. So how do you get around that?
Yeah, well, in the GTA right now, it's very challenging because let's say you're buying a duplex and you're going to renovate the duplex. If you have a tenant in there, you're capped at how much you can increase the rent. So even though you do all these renovations, you have to apply for an increase in excess of the government mandated rent increase, the annual rent increase, and you're not going to get the return. So there's no incentive to do that. So you have to wait until the tenant moves out, get a new tenant in at market rent. But that could be years, and in some cases, this can stay for 20 years and still be paying the rates from 1980, right? So that it but on the commercial side, and if you're in different markets without rent control, that's a classic value add strategy. You're purchasing an underperforming asset. You are improving either the physical characteristics through renovation, and you're also improving the operational efficiency. So, optimizing expenses, adding value-add services to increase the NOI. And what that's going to do, that's going to increase the net operating income the property produces, and that's raise the value of the property. So 100%, like we're always looking to add value to a property. So it's whenever we're looking at a property to take down, it's like, okay, how can we, improve the property through renovation, rehab, to get those target rents, and also like what can we do on the operation side to really minimize those expenses, bring them more in line to boost up that NOI.
So when you're buying these properties, it doesn't matter 100, 200 units, buying into cash flow a lot more than in a value of the property, right? Where in the US, you will have both options. You can increase the value, you can increase the rent, and better cash flow. But here it looks like, you cap with the rent. You just bring in the cash flow in if you're making investments, right?
Yeah, I'm friends with many investors who invest here in Ontario, and it's challenging. Like, some people resort to what's called cash for keys. So they'll basically bribe the tenant, say, okay, I'll pay you, $3,000 to move. And it's just to get them out and then bring somebody in at market rent. So here's the thing, like from in no other place do we make private citizens subsidize somebody else's cost. So for instance, let's say you have a mortgage. Is the bank going to discount your mortgage rate just because you were paying a lower rate 10 years ago? No, when you're up for renewal, they're going to charge you the market value. That's what when you go to the grocery store, are you going to pay X amount of milk, the prices 10 years ago? No, you're going to pay the current market
price.
When you're a tenant here in Ontario, you can pay a decade-old rent price, and the owner is supposed to subsidize your living costs. That's the root of the problem. I obviously have very strong opinions about it, as you can tell.
Of course.
But yeah, like it's just backwards.
Wow. Very interesting. So let's talk about business leaders. Like, they build the businesses, and I'm in the same boat. This is probably more for me than anybody else who are listening. Where do they start? What can they start? I was never a proponent of buying houses and because the same reason you mentioned, that administration is so much, maintenance so much. Why do for 1 or 2 doors when you can do for 50, 60 doors, right? So it makes much more sense to me, and definitely for the cash flow. I haven't studied the Canadian market much. What would you recommend? What can people start from? How do they go about it, or do you guys help out? Instead of me buying 1 or 2 units, do you get provide options? Hey, listen, and you can be part of the bigger deals with you.
For sure, yeah. And you know what? For the majority of people, they're working hard, building their business. They're doing what they do every day, putting food on the table. It doesn't make sense to start from scratch and start another business and work your way. And especially with commercial real estate, like your track record, your reputation, it means a lot. So if you're a newcomer to the game, it's a steep learning curve. Getting involved in these larger deals as a passive investor. So you're investing, let's say $100,000 in a deal. You can still focus on what you do every day, and somebody else is managing the deal, generating those returns, and you're getting your paycheck. So, I think a big advantage is right now, if somebody's looking to buy a duplex in Ontario, you're not going to see any cash flow, and you're expecting appreciation of the asset value, but that's not investing. That's speculative because you're hoping it's going to go up in the future. But when you're investing in a cash flow producing asset, you have the cash flow plus you have the appreciation. So looking for these large deals, you can invest in them through what's called syndication or through a fund. And it allows for, regular people, running their business to benefits of the real estate investing, but without having to learn everything from scratch. Plus, you're getting into better properties rather than just like a duplex somebody would be able to do on their own.
So is that primary reason people invest, just to bring a cash flow in, or do they do for equity as well? Like how do they plan and how do they go about it? Even in Canada or US.
Yeah, so 100%. So the big draw, there are three main reasons why somebody would want to invest in multifamily. Number one, it's the cash flow. So it's not like you're locking your money away for 10 years and not seeing anything from it. You're getting monthly or quarterly distribution checks. So through running the value add strategy, you're getting appreciation when you either refinance the property or you sell it. And then third, it's the tax benefits. There are so many advantageous tax benefits to investing in multifamily real estate, especially in the US, and Canadians can take advantage of it. There's cost segregation. So we're actually front loading depreciation. So depreciation is the world's greatest thing. The government actually giving us a discount on our taxes for owning real estate because the properties, the buildings going to depreciate in the US it's over 39 years, but we're getting these tax credits and we can front load it to the first couple of years. So on day one you get a huge paper loss that's going to offset the majority of your gains. So it's very, very tax friendly. And that's a big reason why a lot of investors do it. Not only for the cash flow, and the appreciation, but also the big tax benefits.
I see. Do people need to start learning into all these nuts and bolts into real estate investment before they do that? I haven't started. That's one of those items in my agenda. I was going to get to this item maybe later on this year, but. What do we have to understand all the rules and regulation with the in the US or in Canada? How do we start a learning curve and how do we start understanding before you start making investment?
Yeah, so I always suggest that every investor, whether you're passive or active, you should have a basic understanding of how the asset works and how money is created. So let's say you're a passive investor, you're running your business and you're looking to invest in somebody else's deal. As a passive investor, you should understand, how they're going to make money in the deal. Do the numbers seem too good to be true? You should have a basic level of understanding, but nobody expects you to become an expert. That's why the person running the deal is running the deal. You should have that basic level so you can look at 10 different deals and know that the top two are better for these reasons and why you should discard like the bottom three. That sort of thing. And there's so many resources out there. Like we run a YouTube channel where we're posting, weekly videos. We have the podcast, TV show, and then we're also running a huge conference in May in Toronto called the Multifamily Conference. So if somebody's interested in learning more about the commercial side and multifamily, there are so many resources out there to get started. But I think that the biggest piece of advice is like at some point you just have to do it. We can study forever, and it's analysis paralysis. Yeah. I talk to so many people, and I'll see them 3 years later, and they haven't done anything because they're just waiting for the perfect time. Well, the perfect time was yesterday.
I see.
Just feel comfortable, get that basic knowledge, understand how the asset works, and then find somebody you can trust and get started.
Wow. How does this asset compare to other, so many, the Bitcoins investment these days or cryptocurrencies and all this stuff? You guys still recommend this over, what do you see that return and what are your thoughts on, those digital currencies?
Yeah, so I've got a couple friends who are very into the digital currencies, and after recording this, some are not so happy. Some are, but there are so many different ways to invest your money. But one thing I looked at when I was thinking about, okay, how am I going to invest here? You look at real estate, real estate has built more wealth than anything else. And this goes back thousands of years. We can look at the Romans, and they were developing property and stuff like that. So it's tried and true. The strategies don't change. The tactics rarely change, and it's proven. And there's a system. There's so many people who have paved the way before. I'm no crypto expert. My knowledge level is very slim, and I can't really speak to the next latest coin or anything like that. All I know is when I'm looking to invest, to make it an investment, it needs to produce cash flow, and it needs to have a controllable appreciation aspect. If I'm purchasing something and the only way I make money is if the price goes up, that's speculation, and I'm not really looking to place my capital there.
Yeah, you can touch and feel, and you can at least drive to the building and see there's a real asset standing there, not just a digital currency, right? So, go ahead.
I know lots of people who have made a lot of money in crypto, but I also know a lot of people who have lost a lot of money in crypto. So I just stick in my lane. And when you think of it, even with the whole pandemic, office space closed down, people still need a place to live. Yeah. Like that is one of the most basic, when you look at the Maslow hierarchy of needs, like you need shelter, and that's what apartments do. They provide shelter. People will always live somewhere.
Yeah, you're gonna need that, right? So there's one of the necessity, right? That's why it's a very safe asset that way. So how small do you guys let people to start? If somebody wants to get into one of your deals, how small can they start, and how can they scale from there?
Yeah, great question. So we deal with accredited investors.
Okay.
So an accredited investor, there's a couple ways you can qualify. The most basic ones are as an individual, if you're earning $200,000 or more per year. As a couple, it's $300,000, or if you have $1 million of net assets, not including your primary residence. That will qualify you as an accredited investor, and that opens up a lot more opportunity. And with us, there's every syndicator or fund will have different levels of entry. Some will allow a minimum investment of $50,000. Some will be $100,000. Some will be $150,000. Some $300,000. It all depends. Myself, we're about $75,000 as a minimum, but it all depends on who you're working with.
I see. And you get to say, pick a building or asset where you want to invest money on, or is it just in a fund you put a money in, and then they decide what buildings they're gonna pick on? Yeah,
so that's a big difference between a syndication and a fund. Okay. Syndication is done on a deal by deal basis. So if I'm syndicating a property, I'll approach you as an investor and say, hey, listen, I have this property under contract. This is our business plan. This is what we see happening with the building. Would you like to invest? And you say yes or no. Okay. Fund. You're investing in the fund criteria, and the fund could be acquiring multifamily property in B+ to A in the southeastern United States, for example. And then you would invest in the fund criteria, and then the fund would go acquire and divest of properties throughout the life of the fund. But you as the investor don't get the individual say. There's pros and cons to both structures. But that's it in a nutshell.
So where do you guys, what area where you buy most of the asset? Is it a certain area? Are you all over US or any area you guys focus on?
Yeah, we are aggressively hunting right now in Texas and Florida. We see really strong market drivers in those two states. So we're focusing a whole lot of attention in those markets.
Yeah, these two market probably makes more sense because a lot of people moving to these states in the U.S., right? Since I think last couple, especially with the COVID and what happened with the last election, I think a lot of people moving towards these states, right? The population is growing quite a bit there.
Yeah, the demographic shift is very interesting. You have people fleeing the coasts. You have high taxation, and all the jobs now. You're looking in those southern states. You have a whole lot of growth. So people are fleeing California, the New Yorks, and they're moving to more affordable places where the tax policy is better. You have more job creation, and industries are moving there as well. So over the next 20, 30 years, you're going to see some insane growth in those states. And yeah, so that's definitely where we're focusing.
Yeah, recently Tesla moved there, I guess, right? So I think a lot of tech companies are from California, so from Silicon Valley, they're moving out to Texas
Yeah,
just because of the taxes, right?
yeah. Joe Rogan even moved. So,
Oh, did he move?
so,
I was.
yeah, Joe Rogan left California, so
Uh,
he's like the highest profile podcast host there is right now. So
mhm.
a lot of notable people are moving and choosing to live in some more, I guess, business friendly states right now. You can't fix an economy through taxation. It just doesn't work. So
Yeah, yeah. Well, we do that in Ontario, but I don't know. I don't know how that works
yeah.
in the US. But do you have enough inventory in these places there to pull from and shop around?
Yeah, it's competitive. Like everywhere you look, it's competitive. So on any given property, there's going to be a number of bids. So it's what can you offer the seller that's going to put you at the top of the pile. That's what it is.
Yeah.
There's no way to get around it.
So Canadians, when we buy properties, we invest in the buildings. Do they simply invest for investment's sake, or they also invest for their, the winter homes or retirement homes when they can go there in Florida and come back in the summertime, right? So is it just a temporary residence, or they also invest as an investment as well?
No, yeah. With the multifamily product we work in, these are long-term rentals. Families will live in so it's not like a Airbnb type of thing. So an investor will not go and live in the property for a week. However, I've some people I know in the industry are experimenting with throwing in some short-term rentals into their properties. Myself, I prefer to have that that traditional tenant in there. They're longer term.
Okay.
You have less. There's running a short-term rental versus a more traditional rental. There's the systems are a whole lot different.
Okay.
But I would prefer the long-term family moving in.
I see. Interesting. So just talk about your company. You guys have been doing it for a long time. So how do you guys get people involved in your deals, or how do you go out and educate people? Just walk through your process. How do you guys help out people who want to invest in your properties?
For sure, yeah. But we produce a whole lot of content to start educating people, because one thing I found is just like me when I was starting out, I thought apartments were untouchable. And most people, if you go in the bank's not going to talk to you about alternative investments, because they want you to buy their PIC.
Yeah.
It's like a hidden world of investing.
Yeah.
And I call it like the Iron Curtain. So we're pumping out a lot of content just to raise awareness. Hey, listen, instead of investing in this mutual fund or the PIC or the extreme savings account offering 0.5% interest from the bank, there are opportunities out there that can earn you like 13, 15, 17, 20% IRR on your money. And when you look at wealthy families, that's where they are investing their capital. So, content creation is huge for us. Just spreading the word and really letting people know you do have better options out there. Just people don't know about it.
Mm-hmm. Isn't people in Ontario, they're open to these options? A lot of people I know follow and they learn about it, or I see a lot of people in the US, they are more open to it because they have so many options. I'm not sure if the people in Ontario, because I see a lot of investors I know from my circles, they're buying houses. They'll buy 1 or 2 houses. They do investments here and there. Are they open to your side of things?
There is a huge demand from Canadians for this type of product. It all goes back to knowledge. You turn on HGTV, it's all about flipping a single family house. That's most people live in a house. So that's what they know. It's just like me. I was a real estate professional. I was selling these houses. I knew nothing about commercial real estate. And that's most people buy a house. They'll put in a tenant because it's easy to understand. They're familiar with it. It seems easier, but the truth is, investing in multifamily, the benefits are far superior, and the learning curve is not very steep. So I would suggest that it's well worth, if somebody's looking to invest in real estate, take the time to explore all your options, because with a single family home, you're going to be in the red most likely, and then you're going to self-manage it. That's going to suck your time. You're not going to generate the cash flow. Invest in a multifamily deal. You're not on the hook for tenant calls. You have on-site management. You have somebody running the deal who knows what they're doing. You're getting regular checks. All the benefits, in my opinion, outweigh that learning curve.
Yeah, I learned that hard way. I couldn't just agree with you more. Bought a couple houses. And I realized it was taking too much time from me just looking for tenant, and then administration, then repair and maintenance. It just way too much time. You can't imagine. And the interesting part is, it's the same kind of amount of time you're going to invest if you have a 10 unit, 20 units, if you're going to do by yourself, right? So, or you hire a company to do it, or partner with somebody like you. But the biggest thing I see, parting with you guys is you get all the time back. You don't have to invest time in maintenance and all this stuff, right? So, just partner with you, and then you don't have to worry about, at least you can focus on your business still.
Yeah, and time, it doesn't matter who you are. We only have so much time.
Yeah.
And then we're done. So, time is our most valuable resource. And, I did what you were doing. I was self-managing all the properties. And with residential, if you want to hire a manager, it's 12% usually of gross rents. And they property every 1 or 2 months. With a 150 unit property, you have an entire staff on the property every single day. So who's going to take better care of the property and the tenants, right? So I think the tenants win and the investors win for sure.
Yeah. Can you extend that to, I saw in the US, I'm not sure if that's possible here as well. If you have an investment property, could you extend that to your staff as well? Or your friends as well? If you want to get other people involved in a community, let's say you want to help out a bunch of people. Hey, listen, there's a property I think, Seth and them are looking for. If they all want to invest, we have friends who want to also invest into that. Could you extend that to them, or they have to, go directly?
Well, this gets into the structuring aspect and the legalese of raising capital for a deal. If everybody is going to be active in the deal and participate, then you can do what's called like a joint venture or a partnership. But if somebody wants to invest passively and get all the protections under the law that comes with being a passive investor, you have to be very careful and comply with, here in Ontario, you have the Ontario Securities, and then in the US, you have the SEC. You have to be very careful with who you approach, how you make that offering, what disclosures you have. Because I've seen a couple people get in trouble where they start raising money from their friends from acquaintances they have for a deal, but they were ignorant that they were breaking a law when they were doing so. So if you are looking at raising capital, like we've got some videos on our YouTube channel that explain the different ways you can do it, but I would always urge caution and just make sure you find out, what is in Canada, everything's run provincially. So figure out what is legal and what you can and can't do in your province.
Interesting. You have any deals in the pipeline that you want to talk about it? If somebody's interested and they're looking, I'm going to include links to all their YouTube channels and all the media below the video as well, so they can check out all the content. But any deals that you want to talk about it, Seth?
Yeah, well, that goes. We can't actually discuss deals, right?
Okay.
With somebody has to become an accredited investor.
Oh, I see. Okay.
Discuss everything, but happy to have those conversations. So if you go on the YouTube channel, you can find everything. But I would say, like, if somebody is looking at learning more about the multifamily product, check out the Multifamily Conference. Like, we've got some of the top leaders and experts in multifamily coming to Toronto May 14th and 15th. Just go to multifamilyconference.ca. And we've got Joe Fairless. He controls over $1 billion of apartment. Wow. Kevin O'Leary from Shark Tank's going to come in and talk about raising capital. We've got some other top speakers coming in. So it's going to be an amazing 2 days. But I would strongly urge anybody, even thinking about investing in multifamily, you will learn a ton and your eyes will be blown wide open with opportunity.
I think that's a great opportunity. But I heard from a couple of channels recently that Kevin O'Leary, he's investing heavily in Bitcoins and digital currencies. I'm not sure if he's still investing in real estate. I'm sure he's a much bigger portfolio. He probably still keeps investment in both sides, right?
Yeah, well, here's the thing. Like anybody looking to raising capital, if you're raising money from investors, it doesn't matter if you're selling a medical business. It doesn't matter if you're selling real estate. You still have to pitch, and investors are pitched every single day. And when we were looking at having Kevin come in, it's like, okay, this guy has probably been pitched more in a year than most people get in their lifetime.
Definitely.
So better to talk about raising money from investors than somebody who is pitched all the time. If you're looking to raise capital for the next real estate deal, that's a guy you can learn a ton from, just from the volume of pitches he's seen and his understanding of money allocation and how all of that works. So that's why we brought Kevin in, and I think he's going to be fantastic.
Beautiful. So how long is it a in-person conference, Seth, or is it still remote? How do you guys do that?
Oh, we are in person.
Nice.
We are, we're seeing some good signs, and so that's May 14th and 15th in Toronto. So yeah, the website's multifamilyconference.ca.
I'll include the link below the video as well, so somebody
for sure.
can just click it. Wow! So it's 2 days in person, and speakers are there. And what else is involved in the conference? Are you one of the speakers as well?
Yeah, I'll be on stage online. Like I could go through a huge list of Pierre Paul Turgeon, Multifamily Insider. We've got Joel Block. So we were talking about structuring and syndications and funds. He is the go-to guy for that. We have Edna Keep. We have like all sorts of speakers coming out. So whether you're an investment veteran or a beginner, like the whole goal is to level up your business. So whether it's leveling up, getting in your first deal, or if you're on your 5th fund, leveling you up to get onto your 6th and your 10th and subsequent funds. So it's going to be awesome. Plus, I'm looking forward to getting back in person, sitting on the computer, because it is not the same.
I think we probably had our longest lockdown in Ontario. I'm sure everybody's looking forward to meeting people again and getting out of their places, right? So I'm one of them. Definitely, because I'm new to this and I want to learn about as much I can before I start and I look investing in. So definitely, for me that's a starting point. I'll definitely probably check out the conference. I'll be there, see if there's enough for me to absorb. I can learn from people who's been doing it for a long time.
For sure, and we'll make sure you get a special discount code for all your listeners and viewers. So we'll make sure that goes down below as well.
Beautiful. Yeah, no, definitely. You work hard in the businesses. Definitely for me, I'm personally looking from cash flow standpoint. All my business is all cash flow, right? So
yeah.
And I want to mirror that with the different market and nothing better than commercial real estate. I'm thinking, hey, if I can build a similar model, I got a cash flow built into that as well.
Yeah, 100%.
Good stuff. Anything else you want to leave for listeners, Seth, before we go? And your website and the link to your YouTube channel, I'm going to include all that below. Anything else any message you want to leave for listeners?
No, like if you decide multifamily real estate is how you want to build your wealth, just do it. Don't wait and put it off.
Yeah, that you got to start somewhere, right? So only way you can scale it, you got to start somewhere, then you can scale it up from there. And
100%.
we got people like you. You guys been doing it for a long time. There's so much help out there to learn from, and shorten your curve to learn and just go at it.
Yep, 100%.
Good stuff. Hey, it was a great talking to you. Appreciate your time. Thank you so much. I learned so much from you, and we'll talk in the future soon.
Yeah, thanks for having me.
Okay, look, likewise. Thank you so much, Seth.